So Warren, you've been known to have some great quotes over the years, and I wrote down a few of them, and a few of them are you can understand just on the face of it, no problem. But there's a few that may need a little bit more explanation. You may get that. So I want to just, can I give you a few of them? Okay, so this is one of my favorites here. It says, "You can't produce a baby in 1 month by getting 9 women pregnant."
Yeah.
So what does that mean?
It means that there's some things that can't be hurried up. You know, like building a brand or something of the sort.
Okay.
You know, I mean, you can't build a brand in a week or a month. Or I mean, there's some things you have to set out to do that you know that there's a given timetable to, and you've got to be willing to play it through to the end. You know, and you won't necessarily have somebody declaring you the winner 10% along the way or 20%. Berkshire's an example of that. I mean, we had a bunch of terrible textile mills, and it took real time to bring in other businesses and develop them and develop acquaintances with people that sell us businesses and so on. So it's very important to realize the time horizon, the natural time horizon of the task you set out to do. And if you can't stand that time horizon, forget about getting on that, on that particular task.
Why do you think there is such a impulse for people to have to trade in and out of their investments and trade in and out of whatever it is, bonds or commodity? I mean, do you think it's the thrill of it? Because you can look at all the great philosophies that you've had, but probably, and correct me if I'm wrong, because you do a better Warren Buffett imitation than anybody I know.
I hope so.
Yeah.
So I want to get imitating my signature on checks.
But I would say it's the ability to stay with your conviction and hold on, and because you believe in the business. That one concept itself seems to be elusive for so many people. Why do you think that is?
It's so simple too. I mean, if you were looking at a small private business in Omaha and you had some money to buy into, maybe it's a McDonald's stand, maybe it's a dry cleaning establishment,
big furniture store.
What would you think about? You wouldn't think about, what Janet Yellen's going to say next week, or something. You wouldn't be listening to the chatter on TV. You'd be thinking about the competitive advantage you might have, who might compete with you, what the return on capital is, what kind of a partner you're going to have in running it, all of the things that are fundamental to a business. Yeah. The biggest problem most people have is they don't think about a stock as being a part of a business. Mm-hmm. Now, when they buy a farm, they think they're buying a farm, and they say how many bushels of corn will it produce, or how many bushels of soybean will it produce in an average year? What are the taxes? What do I have to pay the tenant farmer? They look at it as an actual farming business. When they buy an apartment house, they say, what can I rent it for? How much vacancy will I have? What will it cost me to manage it? How often do I have to replace the roof? All of it. They look at it as a business. But when they look at a stock, a lot of people, when they look at a stock, they just look at it as something that people say may go up, or maybe it'll split next week, or somebody's got a target price on it. Can you imagine having a target price on a farm or an apartment house? It's crazy. Yep. So the key thing is to think about a stock as a part of a business. Just forget about the stock part.
Do you think people don't, or the vast majority of people don't, just because you can trade it?
Yeah, exactly. Liquidity makes them do stupid things. Yeah. The very fact, liquidity, which should be your friend.
Yes.
The fact that you can get out of it 10 minutes later, which you can't do with a farm or an apartment house, that should be your friend. But they turn it into a negative. My old boss, Ben Graham, talked about having a partner named Mr. Market. And Mr. Market, when you own a stock, Mr. Market comes around every day. Let's say it's General Motors. And he names you a price at which you can either buy more from him or you can sell to him. Mm-hmm. Now imagine having a McDonald's stand, and you got one partner, and that partner comes around, and someday they're building a Burger King across or a Kentucky Fried, and he gets pessimistic, so he names a low price because he's afraid you're going to sell to him. So you buy from him. And other days he comes around, there's a big long line of cars in the drive-in. The other guy's shut down across the street, so he thinks he better name a high price because otherwise you might buy from him. So you get this very erratic partner who gives you a price every day, which you can ignore if you wish. But if he says something silly, you take advantage of him. Yep. Now, what kind of a partner do you want then? You want some psychotic drunk, because you want some guy that wanders all over the place, gets all enthused and all depressed. Yep. But you never forget that you're buying the business, and he is the guy that's wandering around in a crazy way. But stocks, you put your finger on it, because they're so liquid, people think they have to make a decision every day because they can make a decision, and it's crazy. Also, there's a propensity of people to gamble.
Yeah.
I mean, when I was 21, I went on my honeymoon. My wife was 19. We went through Las Vegas, and it was 1952. And we stopped at the Flamingo, which was then kind of a motel-like structure. And I went in, and I saw all these well-dressed people most of whom had come 1,000 miles or so, and they'd come to do stupid things. And I looked around, and I thought, boy, am I going to get rich. I mean, imagine going 1,000 miles to throw a bunch of dice where you know you're going to lose money over time if you keep doing it.
Yep. It's
And
the thrill.
And those people are making decisions in the stock market, and they set prices, and all you have to do is every now and then look at one and say, wait, that doesn't make any sense in terms of where it's selling. I mean, people were paralyzed at the end of 2008. I mean, they were just plain scared. Treasury bills went to a negative yield. Imagine that.
Yep.
I mean, you could put the money under the mattress and get a higher yield than you got on a Treasury bill. Yep. When that's going on, you got to be out there with a great big tub. When it's raining gold, you do not want to be out with a teaspoon.
Yep.
You want to be out there with a big ladle. You know?
So I'm never going to forget that last 5 seconds, for the record. It's just etched in my mind already, I can tell. You know, you've said mispriced at the beginning when you were talking about the Nebraska game, and then you sort of alluded to it right now. What percent of your wealth, success, whatever you want to call it, do you think is attributable to mispriced, and what percent is just attributable to you guys doing the work, doing the research, and loving the business?
Well, you've got to do the second to know when it's mispriced.
True.
Yeah. So if I look at, well, just take the Ambassador Bridge in 1970. My guess is, this is way back, but you were probably getting pre-tax 15% returns on if you bought the Ambassador Bridge. Now, here's something that, you know, is a necessity, and, you know, the auto parts are going to flow back and forth, and even if you had just small increases over time, that was a great investment, you know, and that wasn't because I'm any genius or anything. I mean, anybody that knew anything, you know, but I looked at it as a business, and other people would look at it and say, well, the stock hasn't done anything for a couple of years. Well, who cares whether their stock's done anything for a couple of years? I mean, I don't care. I don't know whether my farm has done anything for a couple of years. I know what it can produce. So you got to look at it as a productive asset and not as something that wiggles around on a piece of paper.
Do you get a feeling like when 2008 or other times where the market's just been irrationally sold off? Is this a golden gut feeling, or is it just, you know, is it all of a sudden you look at a bunch of numbers and how do you come to the point where saying that day that you call it whatever, raining gold, how do you know it's a raining gold day?
Well, you don't know that it won't rain more gold the next day. I was early.
Okay.
The market hit bottom in March of 2009, and I invested a lot of money. So you never know what the market's going to do. I haven't the faintest idea what the market's going to do next week or next month, and I don't think about it. I don't know what farm prices are going to do next month. You know, I mean, you've got to focus on where it's likely to be in 5 years or 10 years, and you can't predict market fluctuations. And if you think you can, you know, you get in trouble. So that day in September, when Goldman Sachs called me and they said, we need $5 billion, I might have been able to drive a much better deal the next day or the next week or next month. I just looked at the deal that was being offered to me, and I said, this makes sense. And I don't worry about the fact I could have made a better deal a week later.
How many stocks do you, well, I don't want to say stocks, companies. You have this other quote that you use, I don't want to get the words exactly, you know, right, I won't get them right on. But you said something like diversification is for people who don't do their homework or something like that. I may have it a little bit wrong, but your point was
diversification is a protection against ignorance.
That's even
and which
better.
is not, and there's nothing wrong with that. I mean, at all. I mean, if you don't follow companies and businesses, and you want to invest in the American economy, it makes a lot of sense to buy an index fund. I mean, it makes the most sense because you don't know that much about specific companies, but you do know that America is going to be way ahead economically 10 and 20 and 30 years from now, and that's a way to own a slice of it.
And how do you feel about America, 5 years, 10 years? I mean, I know there's sort of these unprecedented challenges. I guess maybe every generation in some way, shape, or form feels like they're having unprecedented challenges. But
no, this is nothing. We had a civil war. You know, just imagine that. I mean, if you go back to 1776, just imagine, just drive from here to Cleveland or drive anywhere you want to, and think of what it looked like. It was nothing, nothing. Now, there were 4 million people around then. We're not smarter than they were. We don't work as hard as they do. But something has changed. Everything that's up here is profit, basically. You know, I mean, a given person may own a house where they owe the money to the bank, but somebody's got the money in the bank that lent it to them, as long as it's not owned internationally. This whole country, you know, is what's been created in a very short period of time, you know, less than 240 years. And it's an amazing. During my lifetime, I was born in 1930. Since I was born, the real GDP per capita in inflation-adjusted
Can we just
terms.
clarify one thing in that? I really, something I've always, what is a capita? And
Per-
people say per capita, is that per household, per person?
No, it's
What
per
is-
person, per person.
How come they don't say per person? They just say capita. Is that a business school? Where I've always, no, I'm serious. It's one of these things
Well,
I've always wanted to know.
I probably won't go to sleep tonight worrying about that, actually.
I mean, what you like? Warren Buffett's
I'll
here.
tell
I
you.
figured I'd ask you that question. Per capita.
No, you stay up tonight worrying about it. I'll think about other things.
Okay.
But per capita,
Per capita.
there's 50,000 of GDP per capita.
Okay.
That is 6 times, in real terms, what it was when I was born. One person's lifetime, 6 for 1.
And that's inflation adjusted.
That's inflation adjusted. That is what this system produces. Our system unleashes human potential like nothing ever has. I met 64 people over there that have taken the course for the 10,000 small business. Those people have just started to use their potential, and it's going to blossom into things. If you go back to 1790, we had 4 million people. The Chinese had about 300 million. They were just as smart as we were. They worked just as hard. Their soil was more or less the same and everything. And yet, a couple hundred years later, you know, we had 25% almost of the world's output, and they had far, far less, even though they had far more people. It wasn't because we were smarter. It's because we had a system that unleashed human potential. And that game has just begun. I mean, we've got there's no surer bet than that America's economic progress will continue at a good clip. It may not include everybody. That's a different question. Now, how it gets distributed is another question. But the overall pie is going to grow.